Good morning, traders. It is Tuesday, August the 13th. Taking a look at the charts, we got the SP 500 and on the left-hand side here is our 30-minute chart where we can see the regular trading hours only. Green bars mean we're in an uptrend, orange bars means we're transitioning into a new trend, and red means we are in a downtrend. Now, if we take a look at the market, we can see here we had a little bit of a W bottom there. More or less, it rallied right up like we were expecting. W formations or a double bottom, usually the depth of the W is the upside target, which is exactly what we hit, which was also a gap window. It filled this gap in price. And now it's faded back down into the support zone, and we're just going to see if it can find some traction. Now, overall, equities are trading lower this morning, so we're actually going to start to break down, and we may come back down for this double dip, or we could continue to go lower. And if we look at the daily chart over here, we could be setting up for a significant collapse. We've got this big rebound, we've got this big rebound. We could go down and test not only just the lows we saw about a week ago, but we could go back and test the June lows. And if we start to break those June lows, you could argue we are starting a bear market, and we could see much lower prices going forward. So there's a lot of big price action unfolding here over the next few sessions or over the next month as this critical level is going to try to hold and the market tries to hold its ground going forward. Now, if we look at the short-term price action, we've got a nice rally here, a bull flag. It's going to gap lower this morning down into this kind of oversold territory. It won't be so much oversold, be very close. This green hashtag down here is an oversold territory based on the current price action. And if it drops quickly to that level, it will be oversold, and that's usually when bargain hunters step in and drive prices up. Now, there will be a gap down this morning from yesterday's close to where the price is trading. It's not a huge gap, it's a small gap, so nothing too significant, but typically when a gap happens, the market will rally back up, fill that gap, and then it could potentially head lower. And you can see our short-term cycle here shows a move up for most of the day and then eventually go lower, and then the same type of thing to unfold. So we'll see where things unfold going forward. Looking over at the rest of the markets, let's take a look at US dollar index continues to hold its ground at this consolidation level. It's top of a gap window. It's kind of a real support zone. It's starting to lose its momentum. It's yesterday it turned orange, meaning the momentum and the trend is starting to turn down. It hasn't fully turned down, but this is an early warning sign. If this does unfold, we're really going to see metals take off. And if we look at the daily chart, we got the move down, we've got this consolidation. If this is a bear flag, we're going to see the second half of that move come down and test somewhere down into this support zone down here. Falling dollar will definitely help send metals sharply higher, and we're starting to see metals move up today. Take a look at gold. Gold yesterday was the only precious metal to the upside. We are long gold with a 3 times leverage. It started to break out yesterday. Today it's up another 1.25%. Was up substantially higher. It's pulled back a little bit, but overall gold continues to be the real core safe haven play. Gold and bonds at this point. If we take a look at silver, silver is up over 2% today. Nice big pop from this bull flag. Looks like it still has more potential to work itself up. 1750 is this level we talked about yesterday, would be the first kind of real pop and target. More or less it's hit that level at 1749. So that initial pop has moved well. And of course, with silver outperforming, we should actually see the silver miners do really well. The SIL, which we are long, SIL actually held up better than GDX, GDXJ yesterday. They were all down 1% and change, while SIL was only down 1/3. This is set to probably gap higher today and potentially really start another breakout and run up. So if we look at the price action here on the silver cycles here, you can see we're more or less going from a significant low down here. We've got a longer term cycle here. We've got another significant low that started yesterday, today. We're going to have another kind of rebound. So overall, we've got an upward bias here in the market. We could very well see silver continue to move higher going forward the next 2 or 3 sessions going forward. Let's take a look over at energies real quick. Natural gas, relatively flat on the session, but still overall, it's in this bearish formation. It keeps selling off. It's forming this bear flag, and we're expecting potentially continued washout low, sell-off down in price here. Overall, if we look at the shorter term chart here with the cycles, you can see we've got a longer term. We've got multiple waves in here, but we've got a significant low here. It looks like we'll be having a significant low over here, more or less multiple waves in between. So we could very easily see natural gas continue to move down and go down to test this $2 mark, maybe test this low again. But we're looking for a break of that $2 mark and then some type of bottoming formation, some type of big reversal pattern and a potential breakout for it to go higher, but it hasn't formed yet. Looking at crude, down 1% this morning. It's had a nice rebound. It's come right up to our resistance level on the daily chart here. It's had this oversold bounce. Let me just move back a little bit here. We got down to this 51 level. This was our downside target. It found a technical bounce. It's had a knee-jerk reaction back up. It's under resistance. It's at the 20-day. It's under the 50-day. We could very easily start to see this reverse. And today it is starting to move down. It did poke up through resistance and tag the 20-day today, and it's starting to sell off with some half decent volume. So we could start to see this reverse back down and test these lows. And if these lows are broken, then 44 is going to be the next target. So we'll keep our eyes peeled for potential setup here in crude to try and maybe get in with an inverse ETF for the drop back down here and potentially the break to go down. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.